Now the big thing, team, is we got to talk about entries here. We have to talk about what is the right way to be able to enter onto these shorts. Now, entering sounds easy. Deck, I just click short. I'm in on it. That's not the best way that you guys want to do this, okay? If you guys are a TradeCaster member, you guys have heard this method before, and I want to, again, talk to you guys about this method. But we are going to talk about averaging in the imaginary box, basically DOAing, dollar cost average, or DCA in, dollar cost average, and we want to be able to make sure you get the best entry possible. So if we already take the last 3 days that we've learned and bring it over into our 4th day right now, we are again figuring out already that these plays are going to fall, and we are now trying to figure out how do we get the best entry possible. Deck, we learned about shorting. We learned about these plays going on big time breakouts. We can wait for these big time breakouts. And we just learned again about 10 minutes ago where to be able to look for these best entries on shorts, such as around $1 on FFIE, or again, whatever play, LSDI from past chart history pattern, or again, CCLD, looking at $3 natural whole resistance and lining up with past chart history pattern. So let's take a look at CCLD, for example, right? CCLD traders, CCLD, this was a great one. Very easy, very simple. You guys can see that every single time this play comes on up towards around the price of $3, it gets rejected. Now, in this case, CCLD, bounce, 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 sell off. Then it came up to $3, hit $3, which is a whole number and previous history. We're all set, ready to go. So you know what sounds easy? It sounds easy just to go ahead and say, well, Deck, I just click sell at $3, or I click short at $3, and I'm going to be in on this play. It's not as simple as that. Because a lot of times, guys, you might say that a stock is going to be at $3 resistance, and then guess what the stock does? The stock, again, will come on up towards the price of $2.95 and fall, and then you miss out because you were waiting for $3. There's also times that a stock will run on up towards $3, runs up to $3.10, you get scared, you get out of this play, and then guess what happens? The stock then starts falling on down. So this one was perfect. It ran right up to $3, get filled on it, fall back on down, you make money, right? Beautiful. But let's talk about ways for us to be able to make more money. Let's think about ways for us to be able to not miss out on plays and us to not be scared on plays, okay? So let's talk about how we can do this. What we are going to want to do is we are going to most of the time want to look for multiple entries, okay? Now, I will say this right now. If you are underneath the PDT rule, you will not be able to do this because you are only allowed to have 3 entries per week. So I want to make sure that we are kind of stating that right now, that the PDT rule is going to affect some traders on entering multiple times. The other side is, though, guys, we can be looking for selling the same way. Selling, you can sell as many times as you would like. So you can sell as many times that you would like. Little bit of a heads up for you guys. It's just for entering a play. Now, let's go over this and let's understand this. All right. So what we have is we have $3 resistance, $3, and let's go across the board. The best way to enter is, yes, traders, always try to get in right at $3. But $3 is what we actually want to have as our average. We know, as I already stated, there are sometimes the stock is going to run on up and turn at the price of $2.90 and we're going to miss out on it. And there's going to be times that we run on up, we get filled, it goes a little bit higher, we get scared and we get out, and then it turns and falls later on. So the thing is, we want to average that $3 mark. So this is how I want you guys to start trading with, again, penny stocks, if you guys can, is I want you guys to realize, okay, $3, CCLD, that's going to be a great area for a reversal. Now also, little side note, team, this is, what did I say earlier? The first touch of previous history gets a reversal. First touch of whole numbers, get a reversal. If we keep hitting $3, just like on FFIE, eventually we will get a breakout. So please don't see a $3 touch 1, 2, 3 times, then you short it and you get mad at me when it gets a breakout. It's the first touch is always we get the pullback. Second touch, third touch, fourth touch is now showing strength as the stock is moving itself on up. So please have that into consideration. It's always the first touch. Now, what are we looking for, guys? We are looking for what we're calling averaging in, which is going to give us the best entry possible. So let's say we want to get 1,000 shares on the short side. 1,000 shares on a $3 stock is going to cost us $3,000 as an investment, okay? And we have seen this stock, let's say it's FFIE or something, coming all the way from way down yonder, which is 80 cents. And it's going higher and higher and higher. And we say, I think that this stock is coming on up to almost 300% in gains right now. I think that this stock at this moment is going to turn at $3. So if that is your thought process, first thing that you guys want to do is you are going to want to break down this 3,000 shares into 1,000 share increments, okay? I am going to put 1K shares, 1,000 shares right here. This is going to be at the price of $2.90. So I want to get filled at the price of $2.90. Why do I want to get filled at the price of $2.90? Well, as I said, if this stock hits $2.90 and goes up to $2.91, $2.92, and then starts falling back on down and we don't exactly get to $3, hey, I already have 1,000 shares filled on this play, and at least I have something now in on this play. At least I have something that I'm making money. And if the stock goes from $2.90 and falls all the way back down towards the price of $2, well, ladies and gentlemen, guess what? I just made $900 from that. That is awesome. So that's a 1K investment. That's not that bad whatsoever at all, right? So now with that being said, at this time, traders, what else are we going to want to be looking for? We are going to want to be going up even a little bit higher here, right? We want to be saying to ourselves, all right, this play, I want to average up if the stock runs up to $3 now. So as the stock is climbing and as the stock is moving itself on up, we get filled. And let's say it runs up to $3 now and goes up to 301, 302. We are now going to have another entry right at this price. So we are going to get filled again right at the price of $3. Now we had an entry at the price of $2.90. Now we have an entry price at $3. If we have these averages, if we have these entries, guess what? We have a new cost basis. Our new cost basis is going to be $2.95, which means we don't need to go back underneath $2.90. We need to go underneath $2.95 to get into the green. So we don't start making money here. We start making money up here, which is even better. So now guess what happens? The stock starts fading and falling, and now we make money, double the amount of money. We make double the amount of money because we have double the amount of shares in on this play. So that is absolutely great and awesome. Now let's say the last case scenario. Last case scenario is that we keep going on up and we hit the price of 310. And we hit the price of 310. Guess what we do? You guys can imagine. We get our last entry. We got our last entry right here. Now, getting our last entry, we are filled on this play. We have a total now of 3,000 shares over on this play. And guess what? Our cost basis, since we got filled at $2.90, since we got filled at $3, and since we got filled at $3.10, what's the average of all three of these? These are going to be, the average is going to be $3 on the dot. And now we have 3,000 shares. And if this stock turns and falls and goes underneath $3, not $2.95, not $2.90, $3, now we make money all the way on down. And if it goes on down to the price of $2, we make $3,000 in profits, which is amazing. So what we're basically doing right here, team, is we are giving ourselves the best price by adding more money where we need to add. Okay? Now, the other issue is people don't like this because they say, well, Deck, what if it breaks through this area? Well, I'll tell you guys right now, if it breaks through your top tier, your top area, right here's your stop loss. Okay? So the thing is, you got filled at $2.90, you got filled at $3, you got filled at $3.10. The last thing you want to do is allow this play to keep going higher and higher and higher and higher, and then you just lose a ton of money. If you are going to use this and average in to get a better entry, guess what? You are going to want to have a stop loss right here so that if it does keep on going, guess what? Worst case scenario, you lose $300. What if the worst case scenario was you lose $300, but the best case scenario was you get the reversal, you get the turn, and you make $3,000? You are making 10 to 1 money, 10 times what your loss would be, right? So that is what is so incredible and so great about this. Now, what is so awesome as well is people like to change these numbers around a lot. And this comes down to your strategy. Does it have to be 1,000 shares? No. Go off again what you're thinking. Guys, do a Deck, I only have a little bit of money in my account. Okay, if you only have a little bit of money in your account, instead of doing 1,000 shares at each place, why don't you just do 200 shares? Do 200 shares here, do 200 shares here, do 200 shares here. And you know what you'll notice? Sometimes you don't get filled at all, as I said. You get filled at $2.90 and it falls and you make money. It won't be that much money, but you make some money. And some money is better than no money. Sometimes you get filled with $2.90 and $3 and then you make money here. Sometimes you get filled with all three and then you make all the money here. And sometimes, again, you get a little stop loss, get on out, and you lose, again, a very small amount. But this is allowing you to get every single entry possible on the best average possible. Now, I'm going to show you guys a couple different little strategies here. Some people also do this. Some people don't like to do 200 shares. Some people like to do it in this way. They like to say, hey, Deck, I'm going to do 500 shares at $2.90. Then I'm going to do 1,500 shares at the price of $3. And then at $3.10, I'm going to do 3,000 shares. Now, you adjust this to your account size, right? You can change these numbers. But why would someone want to do this? Because, guys, remember when I said if I was getting filled at $2.90 and then $3, I would have an entry price of $2.95? If you have a smaller amount, 500 shares down low, and then you get filled at $3 with 1,500 shares, your cost basis is no longer $2.95. Your cost basis is now $2.99 because you added more money up high. So now you only have to go up a little down to go lower. Now imagine if you add 3,000 shares at the very tippity top. Well, your cost basis is no longer $2.99. Your cost basis is going to be up towards around like $3.07. So the thing is, before, if you again had this, you had to get back on down towards the price of $3, right? Now you only have to get back on down to the price of $3.07. So what a lot of people like to do is they add more shares, more amount. They start small, and as the stock goes higher, they add more, so it only has to go down a little bit for them to be able to make profit. They also are going to maybe change their numbers in this way, where maybe instead of doing $293 and $310, they say, Deck, I'm going to get filled at $275. I'm going to get filled at the price of $310, and I'm going to do my last price all the way up towards around $350. I'm going to do a total of, I'm going to do 500 shares at $275. It hits $275 and falls. I'll make a little bit. I'm going to give it more room, about 35 cents, and then I'll add 1,500 shares up here. So again, that's fine, because now again, instead of $275 entry, my entry is going to be all the way up towards around the $390. And then last but not least, I'm going to have one way up high at $350, which will be my main trade. My main trade up here is going to be 4,000 shares. So the thing is, if I actually do get filled at $350, my new cost basis at this time is going to be all the way on up towards probably around like $330. So the thing is, you're basically covering every single, exit you can. Okay, I'm getting filled here. Guess what? I'm making money. I get filled here. I'm making good money. Okay, I get filled here. I'm making a ton of money. And you're basically surrounding the area of where it's going to turn. You're surrounding the area of where it's going to drop. Remember, team, there's something crucial though about this. You must, no matter where you do, have a stop loss right here. If you just keep saying, okay, I'm going to get filled with big money here, and guess what happens? The stock starts squeezing and the stock starts going higher and higher and higher and higher and higher. Guess what? You are now losing more and more and more. Nothing's worse than losing 500 shares, 1,500 shares, 1,400 shares, and now you're losing like 7,000 shares as the stock is going on up. You are losing a lot of money. So no matter where your last entry is, stop loss right there. And if you're only getting filled one time, hey Deck, I'm getting filled at $3, stop loss right above $3 then. We must incorporate a stop loss. I don't want to put anyone on the spot right now. Is there anyone here who has blown up an account before? Now, you know what I'm going to say? I'm going to take a guess that you blew up your account and you are also a person that does not set stop losses. Got me. The thing is, I don't know one person who has ever blown up an account by setting stop losses. I don't know one person that's out there in the world that says, yeah, Deck, I usually buy stocks and then, if it goes right here, I get out right away. I've never met a person who sets stop losses who blown up an account. What most people do who blow up their accounts is they buy and then it falls and it falls and it falls and they say, oh, all right, I'll get out. And then they get out right here and there's minus $2,000. And then again, next day, they jump in on a play and it goes up a little bit and it falls and they say, oh, it has to come back up at some point. And it falls and falls and falls and then they lose their entire account, right? Don't do that. Guys, trust me. There are a million plays in the stock market. A million. There's a million plays that will happen, okay? We will see tons of plays, tons of action. If a play is not working out for you, move on from it. You guys have heard me say this analogy before, but really what it comes on down to in stock trading a lot of times is you guys just want to say to yourself, is this stock making me money, right? Is this play making me money or is it just a stress? I think about it as a relationship. In a relationship, your significant other should bring you joy, should bring you happiness. You should be excited to be with your partner. If you see your partner and you say, no, not her. If you see your partner and you say, oh, I just had a long day and now I have to go hang out with them. You are not with the right partner. You are not with the right person, right? If I jump in on CCLD and it's taking all my money, it's not, there's a billion other fish in the sea. There's a billion other stocks out there. Why are you just sitting there and saying, oh, I'm losing all my money. Oh, this sucks. Oh, this isn't fun. Click the sell button. Get out. But people just sit there and say, this sucks. Oh, I just lose more and more and more. This stinks. Guys, stock trading is an educational game. It's a game that we have to learn how to be able to do things the right way. But it's also a mental game, as in you have to be willing to pull the trigger. I could give you the best education in the world, which I believe I'm giving to you guys right now. But if I tell you, hey, set a stop loss, and you say, nope, not setting a stop loss, then you know what, guys? That comes on down to you just not listening. You have to be willing to be able to get out of a play if it does not work, if it does not, go the way we want. So this whole entire strategy that, we like to go over right here, this whole entire strategy that we're teaching, it really, again, it is developed almost from casino players, and it's why the casino does not allow this. It's pretty neat. Has anyone ever gone to a casino and you ever walk past the blackjack table and on the corner of the blackjack table, it'll say max bet, and let's say it'll say max bet, and I know most of the time it'll be like $2,000. Now, why does it say that? Why does the casino not allow any more than $2,000 on this table? And the reason why they don't allow it is because if you had a lot of funds, you would never lose. You might say, what do you mean you would never lose? And the thing is, if I had a person who had, let's say, $100,000 and I sat down at a blackjack table and there was no max bet, guess what I would do? I would sit down right here and I would say, hey, dealer, put me on in. Here's $1,000 bet. Boink, here's $1,000 bet. And the dealer again takes my money. He beats me. Guess how I can win all my money back? Now I put $2,000 down, right? Put $2,000 down. Now the dealer beats me. The dealer now has $2,000 of my money. Guess what I can do? I can put $4,000 down. Now the dealer beats me. Guess what? He again just took this $4,000 away from me. But now guess what I do? Now I put $8,000 down. He beats me. Guess what I do? Now again, take $16,000 down. So the thing is, is in blackjack, you will not lose every single hand. You won't. You will beat the dealer 48% of the time. 48% of the time, you will beat the dealer. So the thing is, the dealer has that little edge on you, right? But at some point, you will win again. So if there was no max bet, you could just keep doubling your bet. And the moment that you win, right? The moment that you win, you would win all your money back. And now the casino would have nothing and you would be back to where you started. And let's say you just start getting a little bit of a hot run and you start saying, ooh, I won 1,000. I won 2,000. I won 3,000. Ooh, I just won a little bit of a run. I just won 2,000, 3,000. Oh, he just won one. Okay, let me just double my bet. Okay, I just got that back. Okay, I just won 1,000, 2,000. Oh, he just won 2,000. Okay, let me again do a $4,000 bet. Ooh, I just got that back. Okay, now let me win. Let me win. Guess what? If there was no max bet, you could literally just win at the casino nonstop because you could just keep doubling your bet. And the moment that you win, you get all your money back. So then you win one, you win two, you win three, you win four. And then guess what? You lose one, just double that bet, you get all that money back. You win again. And you would progressively keep making more money. So that's why they always say max bet. Even like Dana White, who gambles a ton, they say, hey, Dana, like your max bet is like $100,000, right? Because they would know he would just keep doubling it on up until he won it all back. They would never win. So this is almost like what we do in the stock market. In the stock market, a lot of times, if I see a stock that is moving itself on up, there's a lot of people in the world that do this. They say, oh, I'm going to short this play right here with 500 shares. Okay, awesome. Then the stock again moves itself on up even a little bit more, right? Stock moves itself on up a little bit more. You say, oh, it's going up a little bit higher. Guess what? I'm actually going to short this play right now with 1,000 shares. Now your cost basis is right here. Now again, the stock starts moving up a little bit higher. And you start saying to yourself, oh, moves up a little bit higher. I'm actually going to jump back in right here with more shares. Now I'm going to do probably about 2,000 shares right here. Your cost basis is no longer down there. Your cost basis is all the way up here. So guess what happens? If you just keep adding more money, the moment that this play eventually does fall, guess what? Now you make a ton of money as it comes crashing all the way back on down. Now you make money as it comes crashing all the way back on down. Now, if you could not do this strategy, and let's say you bought at the 500, right? And you couldn't add any more gains to it, guess what? You're at 500. You got to wait until the stock comes all the way back to this point before you even start making money. And that, that could be after you're down a ton of money. That could be after you're down a ton of cash, whatever it may be. So it is in the stock market, the rich do have an advantage. The people who have more money do have an advantage because they could always average up. Now, I do want to throw out a disclaimer right here. This lesson right now is not me telling you, go ahead and just keep adding on to all your losers. Please do not take this out of context. What I'm trying to show you is there are ways for us to get a better average, but do not say, oh, Deck just tells us to buy against spikes and just keep adding and adding and adding and adding until we again come crashing on down. No, that's not what I want. I want you to be able to figure out where are we going to fall, such as, okay, I think CCLD is going to fall at $3, bounce 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 at $3, $3, natural resistance line, $3 again, where we are probably going to hit and reverse. Okay, Deck, I'm going to do a shorting average at $3. Okay, I like the idea here. That's a good shorting idea. So yeah, I'm going to do an entry right here at the price of $2.90. That's going to be my first entry. I'm going to get my second price at $3 and I'm going to get my third price at $3.15. You got filled here, you got filled here, you got filled here. Your average is right here. And guess what? Now you're making all this money as the stock falls. Boom. That's what I'm trying to teach you today. Not, oh, the stock's going on up. Deck just said keep on buying. Oh, I just bought. Oh, I'm losing all my money. No, we're doing this at the reversal area. We're doing this at the reversal point so that we do have the best average. We're doing this at the reversal point so we can make the most amount of money. We're doing this at the reversal point so that we can be able to progress to be able to take on top. All right. So that is going to be so crucial, so awesome to make sure that every single trader is all set, ready to rock and roll.